Hi, my name is Shakira. This is the Love of Money podcast. So I'm going to talk to you today about should you be doing real estate or should you be doing the stock market? Which one? So the answer to that is both. Keep in mind, I'm not a financial advisor. I don't give financial advice. This is for educational, informational purposes only. So, as far as the stock market goes, the problem is that you're not in the stock market. You should have been in the stock market a long time ago. Since you turned the age of 18, you should have been in the stock market, but nobody bothered to tell you. So later on in life, you find out, oh, I'm supposed to be in the stock market. So the way the stock market works is you dollar cost average, meaning that you put in a set amount of money every week or every 2 weeks, whichever you decide, whether the stock market is going up or whether it's going down. That's dollar cost averaging. And so some people were born into households where they were taught about compound interest and how compound interest works. As you know, this is not in the school system. And then we have other things such as the media, which perpetuates fear. For example, this war between Russia and Ukraine. As a result of the war that is going on now, the stock market is tumbling, if you haven't noticed. We're seeing reports that the Dow is down by so many points. So, these things that you hear about the stock market tumbling, it creates fear. And so as a result, people who are in the stock market begin to take their money out of the stock market, which results in a further decrease, a further fall, a further tumbling in the stock market because people are taking their money out. However, there is a segment of the population that is not even in the stock market to begin with. And then when they see these stories of the stock market falling, they figure, "Mm, I don't know if I trust this stock market thing. You know, stock market is falling, and I'm hearing these stories about people losing money." Well, in actuality, you should be in the stock market, dollar cost averaging, whether it's going down, whether it's going up, whether you're hearing fear stories on the media, whether you're hearing good stories on the media, you should be in there and be in there, dollar cost averaging, no matter what is going on in the world. And you should have been in there 20 years ago, 30 years ago. Because what happens is, even when the stock market goes down, it eventually will go back up, and it will go back up higher than where it started at initially. So just by being in the stock market, you're making money passively. And so, if you're not familiar with the stock market or how compound interest works, um, get on some compound interest calculators and just play around with those compound interest calculators to get an idea or feel for how the stock market works. So, as of now, the whole focus in the media is Russia and Ukraine, even though there are a whole lot of different other important things that are going on in the world. Not to say that this is not important because it is important, but what the media does is there are other stories out here. There are other people that are trying to be heard, and they won't hear them. Can you imagine that if you have a story that you need to get out to the public and just being completely ignored? So that is what is happening to some segment of the population, being completely ignored. The focus was COVID in the past couple of months. Now the focus is Russia and Ukraine. And so they pick and choose what they're going to focus on. And then they leave the rest of the population unheard, out of sight, out of mind. It's a whole lot going on. out here in the world that needs media attention. And so, as far as should you be doing real estate or stocks, you should be doing both. And so, as far as the stock market currently, it's tumbling right now because of the war. As you know, the United States has put sanctions on Russia, and what that means is that the West has cut off their it's cut off the two largest banks in Russia, and the U.S. has cut Russia off from direct access to the U.S. dollar. And so this is what the US is doing. They're putting sanctions against Russia, but it's not only the United States. The United States is not the only ones that is opposed to this war. There are a whole bunch of other people who are opposed to this war. That includes the United States, the United Kingdom, the European Union, Canada, Japan, Australia, Switzerland, and then there are a whole bunch of other countries who are against this war and who plan on putting sanctions on Russia. And the plan is to see the economic collapse of Russia. So basically, not giving any money to Russia, and then the plan is for them to collapse economically, like to go into recession. However, if you haven't noticed, Russia is very smart. Like they have their own spies, and their spies are entangled inside of social media and places where you wouldn't expect them to be. Social media, they may have outsmarted these other countries if they are in cryptocurrency. Because if you have cryptocurrency, then basically you could care less about fiat fiat currency. So time will tell on that. The plan is to collapse Russia's economy if they do not stop uh, invading and terrorizing Ukraine. So Russia is very important as far as the exports go. They export 40% of natural gas. Europe gets 40% of natural gas from Russia and 25% of oil from Russia. So Russia is very important for natural gas and oil. So what happens with this is that if their exports are delayed or stopped in any way, say that Russia decides they're not, since you're not giving us money, we're not going to give you oil or natural gas. If something like that were to happen, then that would cause a shortage of those things in other places. And shortages mean higher prices. So shortage is higher demand, higher prices, and things like the oil, natural gas, and then the other things that I have mentioned in the prior video, such as food and the price of cars and things like that. So, should you be investing in real estate or stock market? You should be investing in both. Stock market, dollar cost average, no matter what is going on in the news, no matter if the stock market is declining or rising, dollar cost averaging, and that is a long term strategy. As far as real estate goes, real estate is more of a retirement plan if you want to have a safe retirement. So, with real estate, what you would be doing is buying something like one property per year, having some kind of strategy, one property per year, so that by the time you retire, you'll be having that income coming in instead of depending on things like Social Security. You would have that rental income coming in. So, say for example, you buy one property a year, then you retire in 10 years. You have 10 units. Then you have that income coming in from the 10 units to support you for the rest of your life. And then when that property is paid off, you'll be having more income coming in. So the current income would just be the income minus, like, okay, you get the income, but then you still have to pay the mortgage on it. So you would get that profit, the cash flow from the rent that the tenant is paying, you would get that. But when the entire property is paid off, you would be having increased income. So, say for example, one unit would give you $250, for example. So, after the complete mortgage is paid off, say for example, 6 years down the line, instead of $250 for that one unit, you would get something like $850 for that one unit. And imagine having 10 of them. So some having some kind of strategy like that so you can have a safe retirement, that is the reason why you would get into real estate. Now, as you know, I interview a lot of people, and one person told me that one property per year is actually low level thinking, that you can do a lot better than that. So I'm just here to get the information out to you. And that's just an example of a strategy to have a safe retirement, is using real estate. But I did want you to know that real estate is slow. It's very slow. So if you want something quick, you need money now. You need it quick. Say, for example, you hate your job and you want to get out of your job, or you just want extra money right now, or maybe 10 years down the line, it's too long. It's too long for you to wait. Then what you need to do is you need to create a business. So business will be quicker than that real estate. So you're doing the short term with your business, and then you're doing the long term safety with your real estate. You're doing this at the same time. You're creating safety and you're creating security. So essentially, the stock market and real estate, as I stated, with some kind of strategy for a safe retirement. So, this is sponsored by Elevation Mentor. Elevation Mentor is a company that will help you to get your first rental property. If you are interested, you can contact me. Uh, the email address will be listed below. You can contact me to see if we would be a good fit, and I can walk you through getting your first rental property. So, this is the Love and Money Podcast with Shakira. If you like this podcast, please share it with one other person. On the way out, please hit the like button, hit the red subscribe button, and the notification bell next to it, and then leave a comment below. Thank you for watching and have a great day.